any of the digital asset markets this year, they're just beautiful accumulation charts, higher highs, higher lows. There's volatility. And there was that period, and it was almost 5 months, where we were flat. We kind of had the big run in Q1, and then we kind of went flat through the summer. But, since October and Moonvember, it's been crazy. And
yeah.
And yet we haven't even started. See, this is what's so amazing. And, if you were going to give me an adjective, it would be ebullient. I have not been this excited in a long time.
Hong Kong has adopted a more lenient stance towards cryptocurrencies this year, with a notable shift in the regulator's view on retail exposure to digital assets. In October, the SFC updated its rule book to permit a wider range of investors to participate in spot crypto and ETF investments. Last month, SFC Chief Executive Officer Julia Leong announced that the regulator was progressing towards enabling retail investors to purchase spot crypto ETFs. Leong expressed a willingness to entertain proposals leveraging innovative technology for enhanced efficiency and customer experience, provided associated risks were adequately addressed. Mark Yusko views these developments as particularly exciting, expressing a level of enthusiasm he hasn't felt about anything else in recent times. Positive market speculations are intensifying as anticipation builds for the approval of the spot Bitcoin ETF. Interestingly, the spotlight on the ETF approval surpasses even that of the Bitcoin halving, signifying a pivotal moment in Bitcoin's narrative within the financial system. In the upcoming discussion, Mark Yusko explores the potential shifts in dynamics that the ETF approval could bring, delving into the possibilities of it acting as a Trojan horse and examining the feasibility of such a scenario. Additionally, he addresses macro trends that will be explored shortly in the video.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
One that I'm a little nervous about is it a Trojan horse? Meaning, do those incumbents believe that by approving the boomer wrapper, right, the old school financial services wrapper for this new newfangled technology, that they can somehow control it and make it permissioned? It doesn't work that way, and you and I know it doesn't work that way. But I as smart as I think some of those people are, I think some of them think no, it can work that way. We can get control of this, and we can make it permissioned. But even if they're malintented in the approval, meaning if that's the plan, I'm not saying it is the plan, but if that were the plan, right, to say, oh, we're going to do this to gain control, and then we're going to pass a law to make the rest of what you do illegal, and you're going to have to come through us, and you're going to have to buy JP Morgan coin. Okay, fine. But we in the tech now know it doesn't have to work like that. And yet, once you make that approval, to your earlier point, the very first question, will the other owners of assets say, oh my God, BlackRock's here? Okay, I can stop fighting it, and now I can embrace it. And BlackRock's going to be like, whoa, no, we didn't tell you to embrace it. We told you just to, let us control it. And they're going to say, I can just go buy Bitcoin myself. Or I could go invest in companies that, are doing, payments a better way. And I do think it could be that legitimization, if that's the right word, that people say, okay, let's go find the best idea. And maybe that best idea isn't the old incumbent trying to, put the wolf in sheep's clothing, so to speak. I actually will agree with those that rail against it, saying we don't need it. That's the whole point, is that we don't want you to put it in the wrapper. We want you to put it on your ledger. But here's the thing. It's not going to happen all at once. I believe there has to be the CeFi step. We're not going directly from all centralized to all decentralized without this, or all TradFi to all DeFi without CeFi. And it's just not going to happen, because there are especially, with what just happened where Ledger had some losses, and we're investors in Ledger, and I didn't like that happened. And that wasn't like, their PR faux pas on the, restoration with the seed phrase. That really wasn't bad. But the fact that someone got exploited because they were using a DApp or something, okay, that's a problem. I mean, that's a vulnerability. And is it possible that people could make a mistake and forget where they put their seed phrase, or forget where they put their password, or forget where they put their ledger? Oh, you betcha. So bearer assets are fraught with peril.
Yeah.
Right? We all don't have our bearer assets in our homes anymore. In the earliest days of time, you had Saxo money in your house. And in the earliest days, they had little chickens on them or little pigs, and you had traded them with the other guy at the market. But then like, no, someone's going to come to my house and steal them. So I'm going to put them in this institution, and I'm going to get a little piece of paper. Originally I called it flying money because it would fly away if you put it down. And that was a better system. And then we made electronic systems, and that was a better system. And so we've made improvements, and the digital system will be better. But to think that everyone is going to go directly from A to Z, right? Just no.
MSCI's Global Equities Index experienced a decline of over 1% on Wednesday, breaking a streak of 9 consecutive days of gains. Concurrently, Treasury yields dropped, prompted by better-than-expected U.S. economic data and a slower-than-anticipated rate of UK inflation, catching the markets off guard. Oil prices, having reached their highest level in nearly 3 weeks, settled marginally higher amidst concerns about disruptions in the Red Sea. This unease arose as Iran-aligned Houthi militants from Yemen escalated attacks on commercial ships. Mark Yusko emphasizes the dearth of catalysts in the equity market compared to the crypto space, contributing to the significant downturn observed in most macro indicators. Let's now turn our attention to Mark Yusko for further insights.
And November 6th, they passed the futures ETF, and it's been straight down, after that. And so I don't think there's that type of catalyst for equities. But if I look at the multiple on NASDAQ and the multiple on the S&P, they're not sustainable. If I look at the fact that all the macroeconomic indicators are heading for the hard deck. I mean, I watched Maverick again twice last weekend. I love that movie. And whenever my wife's gone, I just watch the movie. And because she didn't want to watch it again. But and I watched it for the fight scenes, but flight scenes. But it when they're doing that Cobra move, going for the hard deck, it's just crazy. And you look at PMIs, you look at the jolts, the job openings, holy moly. I mean, it's straight down. And so again, not predicting recession, not saying we're going to fall off a cliff, but those are not expansionary type numbers. And I do think there's a little bit of reckoning. Throw on top of that, the third year of the presidential cycle is always the best year, right? There's a 4-year cycle, follows presidential elections. The third year is when the incumbents are trying to stay in power. So they pass a bunch of stuff and do a bunch of stuff and bang on the central bank. And it is not a coincidence that Jerome Powell 2 weeks ago came out and said, yeah, I'm probably cutting next year. That is not a coincidence. That you go back in history, every third year that happens because they say we're gonna be accommodative because we like to get reappointed. And so I look at a couple things. One, the weighting of technology as a percentage of the overall market. We just surpassed the all-time high in 2000. That was unsustainable. This one is too. And big tech, the Magnificent Seven, are at valuation levels that just don't make any sense. It doesn't mean they can't go higher, but I don't think they will. I mean, personally, I think year 4 presidential cycle is pretty muted year, 3-4%. So, I think that's probably a good estimate for next year. Most people think it's going to be business usual. I always love the estimates are always, it's going to be up 8 to 12%. Always. That's what they always say. And then, sometimes they're too bullish, sometimes they're too bearish, but they're always saying 8 to 12. The fact that we're up 20 in the third year, that's actually about average for a third year, 16 to 20. So maybe even a little above average. So maybe next year has to be a little below average. So maybe it's closer to flat. That'd be my estimate.
The world's largest asset manager, BlackRock, filed an amendment to its registration statement for a spot Bitcoin exchange-traded fund with the U.S. Securities and Exchange Commission on Friday. In the disclosure, BlackRock revealed its plan to seed the Bitcoin Trust with $10 million on January 3, 2024. The filing outlines the purchase of seed shares worth $100,000 for the spot Bitcoin ETF on October 27 by the seed capital investor, an affiliate of the trust's sponsor. The document also details the redemption of seed shares for cash and the acquisition of seed creation baskets worth $10 million by the seed capital investor on January 3, 2024. Bloomberg analyst James Sart noted on social media that BlackRock had submitted an updated amended S-1 form after discussions with the SEC the day before. Speculating on BlackRock's intentions, Sart mentioned the seeding of the ETF with $10 million on January 3, indicating a potential launch shortly after. Another Bloomberg analyst, Eric Balchunas, commented that BlackRock's decision to seed its spot Bitcoin ETF with $10 million represents a significant increase from the $100,000 seeded in October. He highlighted the SEC's request for authorized participants to be named in the upcoming S-1 updates, suggesting the regulators focus on approving applicants who have included the AP agreement in their filings. BlackRock has engaged with the SEC multiple times in recent weeks, with meetings on November 20th, November 28th, December 11th, December 14th, December 19th, and December 21st. The asset manager also filed 3 amendments to its spot Bitcoin ETF filing in December, shifting to a cash creation model after initial attempts with an in-kind method. The deadline for the first spot Bitcoin ETF approval is January 10th, with expectations that the SEC may approve multiple spot Bitcoin ETFs by that date, according to Galaxy Digital CEO Mike Novogratz. Share your thoughts on Mark Yusko's interview and the SEC's interactions with BlackRock and other ETF applicants in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.